Man, I don't know about you, but housing prices in our area are just high, and they're continuing to go up, and they have continued to go up for a long period of time. We're recording this in November 2023, and although it might seem that housing prices have come to a halt, maybe even gone down a little bit, and maybe they have, but like pricing houses are just freaking high. Ian and I are going to go through some down and dirty things related to it. We're not going to get into Wall Street or inflation or kind of the technical reasons. I think we're just going to put together some practical aspects that we've seen inside our home buying business, our commercial real estate businesses, our private lending businesses. And, we see this stuff in real time. And, I think we both have a decent amount of opinions on why they're like that. Like, let's start off with the obvious first. Interest rates. Interest rates have been so darn low for such a long period of time. And whenever we thought the interest rates were going to go up, they kept going down and they kept going down and they kept going down. I remember early to mid 2000s where, a lot of my friends and myself started buying houses and we were at like a 6% interest rate. And, if you're the older generation, your parents would be like, oh, that's a really good interest rate. My first house, it was like 12% or 15% or something like that. It makes a lot of sense. And, there was some, real estate boom, then there was a real estate bust between then, as the rates went up and the availability of capital went up. But then again, starting in 2012, when everything kind of reset through today, 2023, 10 years later, the rates had continued to go down and down and down and down and down until you could get like a 2% mortgage. And as we sit right now, the home mortgage rates, and obviously the short-term rates and the long-term rates are different, even though they both coincidentally have been going up. But, the home mortgage rates are 7%. But even with the interest rates going up, the housing prices still have kind of stayed the same, huh?
Yeah, why are housing prices so high today? It's really just there is no answer from just an operator standpoint. Like Jason said, we are not economists, we are not Wall Street trained, we are not any of that. We are real operators doing real things. So here's my opinion on why housing pricing so high. As Jason alluded to, when we first got in the business in 2012, 2013, I got interest rates in the low threes. And I thought that was always what it was going to be. And then over a period of time, they started raising up to 5%. And then they come back down to 4, and then 6, and then 5. And there was like this resistance level. And as this resistance level kept going, you'd also notice that housing prices continue to grow. But side by side with that, you have home ownership demands, you have low inventory demands, you have rental markets that aren't keeping up because they're getting so expensive. So as you have all these things going on, it continues to increase the price. And I think today, as you said, in November of 2023, we are starting to see some sort of price retraction. But this is also the time to get involved in real estate. Now is always the time. You're always trying to buy something. Every day you're buying or selling. You choose to buy or sell your assets at any given time. And every day that you're holding them is another day that you're potentially increasing value or decreasing value. That's something you need to understand. So I know we're sitting here discussing why they're so high, and you're probably saying, well, Ian, Jason, like, what's the point of this video? The point is the video, the prices could continue to be insanely high, but there shouldn't be any effect on how you view the real estate investments and how you continue to buy or sell your portfolio on an everyday basis.
Yeah, and keep in mind, it's safe to say that there's been more demand than there's supply. And again, we're talking a lot about housing right now, but this can equate to commercial real estate and other types of stuff. But I think, a lot of people, even if they're not full-time real estate investors, they see what happens with their primary residence. Maybe they're in a situation where they're trying to buy a primary residence and they just can't because there's just bidding wars, and the prices are just out of whack. And I certainly understand that. But like in most major markets throughout the United States, there's just no inventory to buy. There's no real estate to buy, even if you want to, even if you have the potential money to. Like, think about the area that you live in. You might be on a city block, you might be in suburbia, wherever you are. But, typically there's a few houses at any given time that are on the market, and the nicer properties sell for a premium. The beat up prices sell a little bit less. There's some opportunity for real estate investors to come in and speculate. There's some room for land, for some new home construction builders to come in. But like, there's been over the last few years zero inventory in some neighborhoods, and all of a sudden a property pops up in your neighborhood and it gets sold immediately, just like that, at ask price, above ask, significantly higher than above ask. That's a scary thing, right? That's a scary thing, and that's hard. Think about, potentially if you have friends that have tried to buy a house recently. And again, we're talking about median housing prices. I'm not saying that this isn't relevant in the lower end markets or the higher end markets, but the median housing price areas where, the majority of the real estate investors and, homeowners, in essence, purchase properties. But, if you had a friend recently that was trying to buy a property, chances are they paid more than maybe, market value, maybe for more than it was really worth, but they did whatever they could to get in. And that's a funky psychological thing, especially since, keep in mind, the interest rates have doubled of where they were in October 2022 of where they are today in November 2023. And although it might have slowed down the real estate market, it didn't come to a screeching halt. Like, think about it like this. If you told me, or if you heard, hey, interest rates are going to double, would you think that whatever people are using debt for would just come to a screeching halt? Like, I think someone would think that would happen, or at least consider that happening. It didn't happen at all. It continued to chug on over and over and over and over. Think about the car market. It's the same thing. And I know we're going on a tangent, and that's what we do in some of these videos, right? Like, we want to be down and dirty in real life of what we're seeing in real time. So, it can resonate. Like, think about the car market. I was talking about that with my business partner, Chris, yesterday, because he just bought a new car. And the car interest rates are double what they were a year ago, right? Because short-term rates have gone up. The car prices have gone down a little bit, right? Not substantially, but your purchasing power is significantly less, right? So it's a weird thing. It's a weird thing. I think, again, things don't happen for, long periods of time like this. I think that, eventually things will kind of catch up, but we're still in a weird spot right now where the housing prices are still so high. I mean, think about for a first-time home buyer, in your market, think about how expensive it is. Like, a first-time home buyer has to spend $500,000 to buy a property. What's the point of buying a property if it's going to cost that much? It's ridiculous.
And I think you need to remember where you fit in the food chain. That's another piece in this whole thing. Right now, for a long period of time, the reason there's high pricing demand is because the guys at the top had so much liquidity and so much capital that they could just chew us up. I remember in probably 2017, 2018, right, when the whole BlackRock thing came really big, we had a pension fund and a private equity firm come to us and say, we need 250 houses here in Baltimore in the next 3 months. Can you deliver it? They had so much capital to deploy. So what does that mean for us in the food chain? Okay, well, prices might be higher. The question is, what are you doing with your asset at the next level? We talked about velocity of capital before on this channel. That's the same thing. Where do you fit in this food chain, and how can you get to the next level? Currently, as we record this video here in 2023, we're talking about selling 700,000 square feet of storage. There are big groups above us that are willing to pay, that have a lot of access to capital because there's so much pent-up demand that they're willing to pay a higher price for something that we're willing to pay a way lower price because we're willing down to get into that nitty-gritty. And then we take that nitty-gritty and then we aggregate a portfolio. Then our spot in the food chain is to take that portfolio and deliver it to the next level of guys. We've packaged it up. We've dealt with all the bullshit. We're taking it to the next level, the next round of guys who have longer term capital. They have the willingness to stay up and down markets. I'm good for 3 to 5, 7 years. These guys are true legacy owners that are publicly traded that will never sell these things. So I figured out where we fit in the food chain. They know where they're at in the food chain. And guess what? The markets will flip at some point. At some point, they're not going to have the same amount of liquidity. That's going to give us the smaller guys more buying power to go out and continue to buy some better assets to ultimately at a later date when they have all the capital to come and buy us. So just remember, it is cyclical.
Yeah, that's a good point. And like, not everybody is using debt to begin with, and they still have to deploy cash or fund or assets somewhere, right? Like, you can't just leave. Like let's say you have, and I don't think, the regular person might think about this, but on a high level, if someone's got liquidity or there's tons of cash and it's sitting in the bank, they're losing money on it, right? Even if the banks pay, I mean, I get it. Right now, the banks are paying, obviously a good interest rate of return and things like that. But like, inflation's really high right now. Everything's double what it was. A lot of cost of goods have been double. So like, investors they want cash because they want liquidity in order to be opportunistic. But most investors need to deploy their money into stuff. And what Ian said is, Ian did on his portfolio, he did all the heavy lifting. He did all the work. These guys don't mind paying a premium. In Ian's eyes, maybe it's a premium, but to them, they're still getting a steal, right? I don't have to go do all this heavy lifting. It would have cost them significantly more to do that. And that's what happens in the food chain of what things work, right? Like, there's a lot of real estate investors that in essence can sell to institutional buyers or corporate buyers, fully renovate, fully nice properties. And they're like, yeah, I sold it at a premium. But it's like, well, there's still meat on the bone for the next person because they're able to do that. They have a capital stack that they need to, in essence, deploy. It's not just, they're not getting, if you have $300 million in cash sitting around, like, you're not getting debt on some of that stuff. Right. So it doesn't even kind of impact you. I also think about that kind of in real life related to second home buyers. If you were trying to buy a vacation home or a second home over the last probably since COVID, I would say, beginning of COVID, like that's an asset class that's very, very hard to get into because you're competing with all cash buyers on that stuff. Those properties continue to appreciate in value, anywhere on the water, on any of the coasts, the east and west coast, up and down beach towns, lake towns, things like that. Those properties skyrocket in value. And, a lot of it was kind of based on there wasn't much, there was demand, but there wasn't much supply of it. And it wasn't even cheap debt that was doing that. A lot of these investors or second property owners, they were just paying cash. Like, you couldn't even compete with them because if it's a luxury item like that on the higher end stuff, like, what does it matter if you pay $1 million or 1.1 for? If you don't have any debt service on it, you're not renting it out, and it's, again, a luxury item. So like, there's a lot more to go into it to think about than like, than just kind of it's not all that simple. But I think to kind of bring all this back full circle, why the housing prices are just ridiculously high, and who knows, maybe they'll change, and maybe they'll, maybe as fast as they went up will be as fast as they go down. But I think there's still in the United States, there's still some sort of lack of housing. I think there's the American dream of everybody wants to be a homeowner if they obviously can. Real estate investing and real estate investors have there's a lot more education in the space than there has been in the past, right? So there's a lot more demand for types of stuff. I'm going to read off a quote that that Sam Zell, similar to Warren Buffett, but Sam Zell stated. Ian and I follow Sam, before he died, unfortunately, but still follow a lot of his stuff. This has always been a fatal flaw in U.S. real estate. The volume of development has been related to the availability of funds, not the demand, right? So, somewhat true. If someone's giving you free money, you take it and you do something with it. Like, that's what occurred, right? You got free capital or very, very inexpensive capital. You utilized that. And I think a lot of homeowners right now are going to be in a tough spot because they've been and I saw this early on in like 2005, 2006, when rates were lower, not nearly as low as they were recently, but property values continue to go up. Homeowners would just live off their equity. They'd refinance. They take $100,000 out of their property, and it's like, I have an extra $100,000 I can go spend. And their quality of lifestyle went up because they believed that their real estate portfolio would continue to increase. Not doing anything. You don't have to do anything. All you got to do is buy a freaking property, and it increased in value, $100,000, right? And then they would sell it and take the profits out, or they refinance it and take the profits out. And that's just manipulated. Like that's short-lived. So I think between the interest rates being low, the lack of inventory, nobody's selling a house on a 3% mortgage so they can go buy another house at a 7% mortgage. There's no point in that, right? Unless they have to obviously sell, relocate for work, things like that.
Yep.
So bring it full circle for us, Ian. We'll wrap this thing up.
Decreases inventory, increases pent-up demand. People want to spend money. We're Americans. People like to spend. It drives the price of houses up. Sometimes there's a little slack in the market, but as of right now, there's going to continue to be pent-up demand. And more importantly, as the Fed decides to slow down rate increases, stability is going to happen. Stability is going to happen, releases pent-up demand. Pent-up demand chews up the inventory out there that's higher. Ultimately, it becomes a buyer's market. Sellers right now it's kind of a buyer's market. It's going to keep weighing towards a buyer's market. Sellers are going to have to recognize price. There is going to be a little dip, but in the same sense, I believe pricing will increase gradually over time. So if you guys enjoyed this, we like getting on here, talking about these things. We're real operators doing real deals, not gurus, we don't believe in theory. We go out here and actually do deals. So if you guys think someone should hear what we just rapped about for the last 20 minutes, please like, share, comment. More importantly, smash the subscribe button. That's how we continue to do these. Whether you do or don't, we're going to keep talking because we enjoy these. These are the phone conversations that Jason and I have. And we will catch you guys on the next one.